Hello everyone, welcome to QuickBooks for Real Estate Investors. This is part 1 of our video series on how to use QuickBooks to manage your rental real estate. This works for anyone who might have a single family, multifamily, many multifamilies, or even some commercial space. The system that I'm going to show you is very scalable, and it's also very powerful because of its ability to easily break down revenue and expense as well as assets and liabilities by each property. This is part 1 of the video series, and this will walk you through everything you need to know from start to finish, transactions, all sorts of things. But for now, we've got to start at the basics, and I'm going to start just like you would at the very beginning. I just bought QuickBooks, and what do I do? Your screen might look a little bit different if you've just installed QuickBooks, but I'm going to walk you through creating a new company, which is the same. So let's get started. I'm going to create a fictitious company that holds rental real estate. And okay, let's do this. So I'm in QuickBooks Pro 2013. This works for 12, 11, 10, 9, maybe 8. I'm not quite sure, but the information is really pretty similar. Once we get into further parts, this information will work for all sorts of versions. Okay, first thing I'm going to do is I'm going to decide that I'm going to create a new company. And QuickBooks wants to walk me through this, so you can do an express start if you like, but I'm going to go through the advanced setup so you can see a perspective, an accountant's perspective, on some options that you could enable or not. So let's do the advanced setup. And my company name is Urban Rentals LLC. That's also my legal name. You could put a DBA here, say I had Urban Rents, and that was my doing business as name, but I like Urban Rentals LLC. I don't have a DBA. This tax ID is something that you will have, and I suggest putting as much information in here as possible so that you have a central repository where you can find your information. Okay, so 65 West you know what? I'll put in a fictitious address in my city, even though this is going on YouTube, so it will help me in the future. So okay, pretty simple, just data entry, nothing real complicated here. Oops, I had one extra digit there for my federal employer ID number. Okay, so this is important. QuickBooks wants to know what industry you're in, and there is an industry, I believe, for real estate brokerage or developer, and there's also one for rental. And I suggest you choose rental, but frankly this doesn't matter that much because all of these options are just preset templates that QuickBooks will use to create your chart of accounts, which we'll get into later. But basically a chart of accounts is the names of every account where you place money. It could be a bank account, it could be an income account, it could be an expense account such as repairs and maintenance. So we're going to change a lot of those in the future, but let's just start with rental because it's a good place to start. How is your company organized? For most real estate investors, it's going to be an LLC. Some of you might have a sole proprietorship, or you might be a partnership. However, unless you're a larger organization, you probably are not a corporation or an S corp. So this is very dependent upon you. If you select LLC, you will have to choose if you have a multi-member or a single member. And I'm going to say I have a multi-member LLC. This would be if you own real estate with a partner, maybe a silent partner, a general partner, a managing partner, something of that nature. If it's just you, but you have an LLC, it's only you, then you need a single member. But I'm going to say multi-member. This is not that important right now. It will be in tax season, but okay, let's keep going. The first month of your fiscal year. For you, those of you who don't know, a fiscal year describes your operating length. So some companies operate on a fiscal year that is longer than a calendar year, and some companies operate on a fiscal year that is shorter than a calendar year, all depending on their business cycle and their business model. For most of you, a calendar year is appropriate, but this is important because if you have chosen a different fiscal year with the IRS, you have to choose the same fiscal year in QuickBooks. This note here says your fiscal year is typically the same as your income tax year. So if you've elected to have an income tax year starting in, say, September, maybe you own some college rental property and you want your fiscal year to reflect your lease cycles, then you should also have the same fiscal year for your income tax return. This is very important. Most people don't know that. So for the majority of you, it will be January, but you should check with the IRS to see what your income tax year is. For me, it's going to be January. I find that to be the easiest. There is no confusion between fiscal and calendar year, and I recommend that. So let's keep going. Okay, this asks you now to set up an administrator password, and this would be something that every time you open up QuickBooks you'll have to log in. So if you've entered some sensitive information such as your tax ID number, your bank account numbers, I would suggest having a password. I'm going to leave that blank for now. I do not want or need one, so you do see that it is optional here. You do not have to do this. It is completely up to you. It's just how secure do you want your file to be. So I think it's important to have, and I recommend doing it. I'm just going to leave it blank for now. Okay, so it just says we're going to make a company file. There's not much here, and it's going to tell you where you want to save it. So I'm going to select in my files where I want to save my QuickBooks company file. And so I use SkyDrive, and I upload all my documents to the cloud for backup purposes. You might consider something similar. If you use the cloud, I would suggest putting your company file in a folder which will be uploaded to the cloud or will be synced across multiple computers on a server. So anyway, just save it where you want it. This is going to take a little bit of time here to create a company file, so I'll be back. Alright, so it's done. We've got a company file, and now it wants to customize what features we're going to use based on our business. So let's click Next. And for most of you in rental real estate, you're only selling services. You're not really selling any products. Even if you're doing some construction work as a general contractor, you're not really selling products. So most of you who are only investors and just own real estate are going to go with services. And most of you who are investors and also self-performers or self-managers, you're also only going to go with services. It is very unlikely that you'll own rental real estate and sell products through the same business. So I can't even think of an example where this is true. Your principal business activity really is real estate. You don't have any other activity that you'd be selling items or material. So even if you do construction and you are a general contractor, you're still doing services. If your business is a construction company and you are in the business of selling HVAC systems, then I suggest that you, well, frankly, I would suggest you put your rental real estate in a separate company. But if that's the case, where you're selling some kind of home goods and your business owns real estate, that would be the only time you would say both services and products. But for most of you, that's probably not going to be the case. Definitely, this is not an example where you sell products only. I don't think there would ever be a case with real estate where that would be checked. Both services and products is very rare. So unless your primary business also owns real estate, you would select that. But even if your primary business is, say, an HVAC company and you own real estate on the side, at least for tax purposes, that's probably treated a little bit differently. So for most of you, I think that services only, just if you're an investor, all you do is own and rent and manage, you're definitely going with services only. So let's click next. Do you charge sales tax? This is going to depend on your state. In my state, Ohio, I do not charge sales tax for rental real estate, and I believe that most states are the same. So for most of you, this is going to be no. And I would suggest looking with your local state taxing authority, sales tax authority, to see if this is the case or not. But for my state, Ohio, it is no, and I believe it's very similar, if not the same, for most states across the country in the United States. Okay. So next, you want to create estimates in QuickBooks. And again, for most of you who just own real estate, you're not going to be creating estimates. Those are going to come from your vendors, who are going to give you an estimate for a repair. Really, again, the only time that you might do this is if your business is, like I said earlier, the example, an HVAC company, and you also own real estate, then you probably want to be creating estimates. But for the majority of you watching, I am going to guess that you are not creating estimates, and in my real estate portfolio, I do not create estimates. There is no need for me to do that. For those of you who don't know, an estimate is just there's no other word to describe it besides estimate. It's a guess of what the work is going to be. So usually your vendor will give you that, your contractor will give you that. So no for most of you. So next, using statements in QuickBooks. I recommend yes to this. And a statement is a way to present in a singular document a history of activity for a certain customer. So a statement could be useful for you if you've got a tenant who might not have paid a couple months rent and you wanted to just give them one piece of paper or email them one PDF that says, hey, here's all of your rent charges, you're late, here's your total that you owe from these past 3 months. So a statement is important. Most businesses use statements. I recommend leaving it on for everybody. So let's click next. Invoices. Invoices are something that you're not really going to send to your tenants because you don't invoice them for for any services. But I recommend turning this on. QuickBooks is going to say no for your business, but the reason I recommend having invoices generate for your tenants is so you can track your accounts receivable. And later on in the video, in this video series, I'll show you how to set up automatic transactions for your tenants. But invoices are important because that allows you to track what people owe you at any given time, and it also shows you how quickly your tenants have paid you. So Some tenants might slow pay. Some tenants might pay on time. All valuable information when you're running a real estate rental business. How quickly you're getting the money in, and how much money is out there that you still need to collect. So without invoices, it's still doable, but it's a little bit more complicated if you're not an accountant. So I really recommend using invoices for QuickBooks. If you're that HVAC company, that example I've been using so far, you definitely want to use invoices. But even if you're just an owner of real estate, you're just an investor, I still think that you need to have invoices. So for everyone, I would recommend to keep this checked. Okay, let's go on. Progress invoicing. Okay, this is something that you're probably not going to use. This is really for contractors, and even some major contractors don't even use this. So unless you're that HVAC company, you can turn this off. And you're just an investor, just an owner, let's leave this as no. Bills you owe. This is important, and I do recommend this. QuickBooks also agrees with me. Keeping track of your accounts payable, just like accounts receivable, is important, especially as you scale and grow and get bigger. You want to be able to manage your cash flow and know exactly how much and when you owe vendors. So bills is the same as an invoice you would receive from a vendor or a contractor or a supplier. In the QuickBooks vernacular, bills and bill is the word that they will use, but it's also synonymous with invoice. Just think of it as it's coming from a service provider, it's coming from a vendor, it's coming from a contractor, it's coming from a consultant. Anybody that you would hire to do work for you is going to send you a bill. So yes, you want to keep this on. Tracking time in QuickBooks. This is something that if you have employees, I would recommend turning this on. And if you are going to want to track how much time you spend at a certain property per month, I would recommend turning this on. So if you're a self-performer, if you're an owner-manager, owner-operator, or you're a landlord, and you want to be able to dial down how much time per month you're spending in each property, whether that be cutting the grass, doing repair, collecting rent, you could be going to the courthouse to file an eviction. If you want to be surgical and you want to know how much time properties are sucking from you, then I would say you want to turn this on. Now, turning this on is really for the person that wants to be super detailed and a person that's going to be fastidious in their data entry. So most of you that own real estate probably aren't like that. So I would say keep this off. But definitely track time if you have employees, or if you want to be very detailed in how you keep your records, and you want to have an exact knowledge of what time you've spent where. We can always come back and turn this on later, but right now in this setup, I think it's best just to keep that off. What do you know? And I was going to ask you if you have employees. For most real estate owners, if you're just an investor, you don't have any employees. If you also have a management company, then you probably have employees, and they're probably of the 1099 flavor. A few people have as many W-2 employees these days as used to be, but you know the difference, because W-2 employees are those that are salaried. You control their hours, you control what they do, you tell them what to do, and 1099 contractors are people that you just hire to get the job done when you need a short-term fix or a contract or something like that. So I don't have any employees in this fictitious business. I will show you in a later part how to do employees, but for now I'm going to leave that off. Keep in mind that don't be confused with a 1099. Don't think of that as if you got a property management company, that's not a 1099 contractor. If you've got if you hire a roofer to come out, that's not a 1099 contractor, unless that is a single person or a single member LLC. Generally, companies, corporations, multi-member LLCs are not 1099 contractors. The only time that you have a 1099 contractor is usually when you're just paying an individual. So I'm an accountant by day, and my clients that I help, I am a 1099 contractor for them. But if I were if I worked for, say, a larger firm, a CPA firm, for instance, I would not be a 1099 contractor. So no matter how much they paid me, they still wouldn't have to file a 1099. So there's some more complicated rules about that if you're unsure. The IRS has got all sorts of information out there. It's very dry to read, but it's also very informative. So if you're unsure about this, I would consult the IRS document, but generally a 1099 is someone individually that you are paying. So, okay, I'm going to go on. I don't have any employees. Let's keep moving. You can read this if you want. It just says chart of accounts. We're going to help you set that up. And this is important. This is going to be your start date in QuickBooks. So if you've just started your business, say you've just purchased a property and you're watching this video, I would say that you want to use the beginning of your fiscal year. So my fiscal year beginning is January 1st, 2013. It is August. I would still say we need to use the beginning of this fiscal year just to start things off clean. You can alternatively use today's date or the first day of the quarter or month, but this doesn't give you any opportunity to enter transactions before this date. So I just like to go with the beginning of the fiscal year, because if you had purchased a property, say today, chances are you've had some transactions already. You might have funded your bank account, you might have purchased some legal services, who knows. So, but if you're an already established business, you've got a couple properties, then I would suggest also using this, the beginning of the fiscal year. Let's see. I'm going to see if I can change this to say. Oops. Yeah, you can go back if you want. You can go back to say last year. I don't recommend doing that because then you're going to have to enter your transactions in for that time. But say you started last month. It's August 29th today. So say you started July 1st. You had your first transaction was end of July. You might just enter this in, but just to be safe and to be clean, I always like to start with the beginning of the fiscal year. I recommend that. But if like I said, if you're a business owner, you've already got some records you haven't put into QuickBooks. Say you started your business in 2011. This is your best option as well because you're starting fresh at the beginning of the fiscal year. If you remember a couple screens back, we decided if we had a fiscal year or a calendar year, and our decision was calendar year. Even though this says fiscal year, it still is a calendar year because it starts in January of 2013. But if you had chosen a different start date, say September, like I had said for college property, then your beginning would be 9/1/2013 or 9/1/2012. So, okay, let's keep moving. Aha! This is the suggested chart of accounts for the business that we've selected, which is rental. And we're going to change a lot of these as we go along. But if you have got some common area maintenance charges and if you've got some tenant fees, I would select this. But this is really going to be dependent upon your business. And I would say that most of these are okay to leave right now, and we can go back and deal with those later. So you definitely need this Ask My Accountant. That's a crucial one. But we're just going to click Next, and we're going to leave this the way it is. Unless you've got a multi-unit building where you are charging some common area charges and other tenant fees, I would leave that unchecked. Chances are, if you don't know what that is, you don't have it. Okay, let's click Next. Okay, we're done. You've set up a company file. We've gone through all the steps. We're going to click Go to Setup. I'm going to let it do its thing. It's thinking for a little bit. And this is going to conclude part 1. So we've just gone through the dialog box and we've just set up our company file the way that we want it. The next step is going to be, you can see here, adding people we do business with, adding any products and services we sell, and adding bank accounts. And I'll go through each of these in detail in the next video series. So thanks for watching, and we'll catch you in part 2.